Hello everybody. So the entire stock market is in a bear market, a bear cycle. Some of the indexes are an entire collapse. Tomorrow the Federal Reserve is meeting and they will probably rug pull us and the market will get a lot worse and stocks will go down even more. But let's say you're on the sidelines and you're very nervous and might be your first rodeo. This might be your first time that you want to jump into the stock market and you truly don't know what to buy. So what are your options? If you are risk averted and you don't want anything that is too risky and you don't want anything that's too crazy, if you don't have the guts for this game to put it all on the line, and that's okay, I'm not saying it in a bad way, then you want safe haven stocks or America type stocks. These are stocks that make money no matter what happens in the economy. And even if the stock goes down, you're still making revenue. How is this possible? The revenue that you're making is something called dividend. And this is a style called dividend investing. A dividend is a give back to shareholders of profits. It's profit sharing between the company you're investing in and you as a shareholder. A lot of companies have it, but most companies that have a dividend is a company that's a legacy company that's been in business for a while and has steady growth, has steady revenue, and is generating a certain amount of profits every single year. The reason why they are safe haven stocks is because they are a super established brand. And the three companies that I'm going to talk about are super established safe haven brands tied to America. And if you believe in America, then these stocks ain't going to go anywhere. The first stock that I want to talk about is Walmart. Ticker symbol WMT. Currently, Walmart is near a 52-week low at $119, with the 52-week low being $117. The thing with these America stocks, with these legacy stocks, they don't usually have a downfall as much as other stocks, but they also don't have a crazy run-up. Let me show you what I mean. Over the last year, Walmart is only down 15%. Over the last 6 months, it's only down 17%. But over the last 5 years, it's only up 50%. You understand? So it doesn't have huge drops and it doesn't have huge gains. But right now at a 52-week low, Walmart can be a really good buy. I don't know how much lower it's going to go, and I'm not a financial advisor, but what I'm trying to say is if you want a stock that is against risk and truly embedded in the American society, you can buy Walmart. And the best thing about these stocks are the dividends. Walmart pays out a 1.88% dividend, which means if you invest, let's say, $100 at the end of the year, they will give you $1.88 worth of dividend. Let's say you have $100,000 worth. You will get $1,880 worth of dividend. The dividend is paid 4 times a year, every single quarter. Now, the dividend doesn't sound like a lot, but a lot of people make a lot of money doing dividend investing. Let's talk about the next company, and then I'm going to give you a secret when it comes to dividend investing. The next company is Home Depot, ticker symbol HD. For the last year, it's only down 9.9%. For the last 6 months, it's down 30%. But over the last 5 years, it's up 77.77%. Home Depot has a very healthy dividend of 2.68%, which means if you invest $100, they will give you $2.68 divided by 4 because it's paid once a quarter. Home Depot is also deeply, deeply embedded in the United States. What's good for America is good for Home Depot. Home Depot is used by so many contractors, both commercial, retail, and local contractors, local handymen, and also regular people like myself, like you, just for some fixer-uppers. But besides for just like tools and supplies for construction, they do have a lot of other stuff that they sell. Cleanups, they make keys, batteries, some food, patio, furniture, so on and so forth. Home Depot, very strong if you want to bet on America. And if you want a long-term play, Home Depot, like Walmart, is probably a good play. And of course, the final company that I'm going to be talking about is going to be Lowe's, ticker symbol LOW. It's very similar to Home Depot. They're in direct competition. I personally prefer Lowe's, at least by my crib. Lowe's is dope. Home Depot is a little whack. Trading at near a 52-week low at nearly 178. 52-week low, 176.43. For the year, it's down only 6%. For the last 6 months, it's down 30%. But for the last 5 years, it's up 120%. And if you go a little lower, you could see that it has a super healthy dividend of 2.32%, which means if you invest $100, you will be paid $2.32 divided by 4 quarters once every single quarter. The key to dividend investing is you open it up with a tax-deferred account, a tax-favorable account. What exactly does that mean? If you own your own business, you open up a SEP IRA, which is an individual retirement account, and it's self-directed. You open it if you own your own business. You can open up an HSA, which is a health savings account. There's a lot of tax benefits for that, but it's triple tax deferred. Taxes when you spend from the account, taxes when you withdraw from the account, and taxes when you trade within the account. And then you can open up a regular Roth IRA, which is tax deferred at the end. No tax benefits in the beginning. At the end, you pay no taxes. SEP IRA, tax benefits in the beginning. You don't pay taxes. When you withdraw your money, you pay taxes at a different tax bracket because you're going to be old. An HSA account, health savings account, is the best of both worlds. For me, investing in a dividend portfolio is not recommended unless you open it through a tax-deferred account. Why? If you're investing and you're getting those 2 or 3%, it's nice, but the taxes is going to take away around 40% of that 2 or 3%. So what are you really left with? Around 1.5%. And the problem with these dividend portfolios, dividend stocks, these companies are not high growth companies. I love Walmart actually. If I had to pick between the 3 of them, I would say that Walmart is going to grow the most out of these companies. All 3 have tremendous online presence. Walmart is actually the second online retailer after Amazon. A lot of people don't know that. They are growing massively. If I had to pick out of the 3 companies, I would pick Walmart. I love Walmart. I actually have a position in Walmart. I don't have a position in Home Depot, and I don't have a position in Lowe's. I think in the future, Walmart is going to grow, and it's going to keep competing with Amazon for the online retail business. It's almost too big to fail. The point is, all 3 of these stocks, they are what we consider boring as F stocks. Really, really boring. However, it's a slow and steady stock, a safe haven embedded in the veins of America with a global presence and a heavy online presence. These big box retailers are not going anywhere. They're not going bankrupt, and your money is pretty safe in these companies. In the long run, you will make money on your investment, not only through appreciation of the company, especially because it's at a 52-week low, you're also going to be making money no matter what time of day it is, good market, bad market, with that nice dividend. And all 3 companies, as the companies do better with a lot of dividend companies, they end up raising the dividend every so often with their annual meetings. They raise, and you make more and more and more. Guys, don't be scared about what's happening in the market. It's a huge opportunity for people to buy in. If you believe in these companies because you believe in America, then believe in the stock market, because the stock market is the backbone. It's literally the blood inside of the body we call America. Without the stock market, America will not exist. A stock market is one of the huge pillars that's holding America up, specifically the American economy. However, it doesn't mean that you got to YOLO the heck out, and maybe you just want to dip your toe in and test the waters. These 3 companies that I just mentioned are excellent companies, but there's no thrills, there's no frills. It's just solid investing, solid big box retailers that will pay you out in the long run and pay you a nice hefty dividend. And if you guys want a brokerage account, I have a link down to Webull. I don't care if you use it or not, but some people don't have an account. You get some free stocks and I get some free stocks. Thank you.